Amateur investors have been leading a wild ride on Wall Street, coordinating to buy stock in GameStop. They're taking on hedge funds who are betting against that stock, and some of those investors are making a lot of money. Now they're setting their sights on new targets. Our chief business correspondent, Rebecca Jarvis, has the latest.
This morning, all eyes on an epic David and Goliath showdown. Amateur investors taking aim at some of the most powerful hedge funds in the country, leaving the hedge funds reeling amidst billions in losses.
It's really a casino atmosphere there.
And now, many wondering if the amateur traders who share tips on Reddit have set their sights on a new target, silver. Overnight, the price of the metal jumping. Hashtag silver squeeze trending on Twitter. Last week, the new guys banding together on social media, buying stock in struggling companies like AMC and GameStop, whose shares surged 400% last week.
I never thought I would do anything like day trading a meme stock.
And for the hedge funds that were betting against those so-called meme stocks, staggering losses. A source familiar with top investment firm Melvin Capital telling ABC News the hedge fund lost 53% on its investments in the month of January. And they're not alone. Now, investors closely watching Robinhood, the trading app with more than 13 million users at a median age of 31. Those Reddit investors now criticizing online brokerage Robinhood, which plans to limit the trading of 8 stocks today, including GameStop, AMC, BlackBerry, Express, and Nokia, to just 1 share purchase per customer.
I'm going to take my business somewhere else where they won't put a restriction on what shares I can and cannot buy.
The chaos drawing the attention of the federal regulators. In an op-ed published in USA Today, Robinhood CEO Vlad Tenev writing that the moves to limit trading of specific stocks was not because we wanted to stop people from buying these or any stocks, but because of an increase on mandatory collateral on the service. Tenev also warning it is possible the unusual and dramatic market swings could occur again.
And Rebecca joins us now for more on this. Rebecca, good morning. You know, Robinhood has gotten a lot of backlash for restricting share purchases in companies like GameStop. What does that mean for trading this week? And is the company trying to make moves to prevent that from happening again?
Well, they're definitely looking at this very carefully, Diane, and I think it's important for people to keep in mind Robinhood, which has 13 million users, median age of 31, is one of many trading apps. They have restricted trading in stocks like GameStop, but so have a number of other trading apps. They just haven't gotten the same degree of attention in some cases because Robinhood happens to be the preferred app among young millennial and Gen Z investors who really got interested in trading throughout the pandemic. And we're seeing this mania, this excitement in a handful of stocks as well as silver today. And I just want to really underscore the thinking here that, Diane, you don't have to fully understand what's happening in the market or the mechanics of this to know your history. And historically speaking, when things get euphoric, the way that we're seeing them in individual stocks, it typically does not end well. When you get to these insane levels, as many would call them, and in fact, one of the investors, people will remember that movie, The Big Short. Well, one of the people who was pivotal in that film, Michael Burry, has called this just insane, unthinkable what's going on in the stock of GameStop. So when we get to levels like this, it's always something to keep in mind as you're standing by on the sidelines or you're participating in trading that typically speaking, it does not end well for the little guy, Diane.
So, Rebecca, what are the long-term implications here, not only for the average investors now kind of newly participating, but also for, in general, how these trades are done? We're seeing the opening bell there ring on the stock exchange. Do you think we could see a change in how hedge funds do business and how short sellers operate?
You know, it's something that the SEC and other regulators are certainly going to be looking at here. You hear the opening bell, and stocks overall today are opening higher, Diane. But I think what really is going to be key and pivotal here is what happens to the person who's watching all of this from the sidelines, not a participant. What does it mean for their confidence? How do they look at the stock market differently? And then also, how do this new group of young investors who, in the best case scenario, they've been encouraged to think about trading and investing for the long term, how do they approach the next wave? Because this is the wave for now. This this is the mania for now, but in the long run, it's about putting that money away in a 401k and an IRA. And frankly, not enough people are doing that for the long term. That is the way you can save for retirement. That is historically the thing that pays off for everyone, not just the lucky few who time it right. Diane?
All right, good tips. Rebecca Jarvis, thank you.